So hello. The first thing that I do when I come to the market is this. I look up at the 1 hour chart, and all I do is where can the price reverse to go get the liquidity. Okay, and I'll be explaining this with a chart. Okay, for me it's like we sweep. As you can see, we sweep this liquidity and then respect it with this lower high. Okay, and then for me it means that, sorry, there is liquidity here, so we can have a possible reversal point from here to go get liquidity above. And then, as we can see, we can mark up this. For me, I'm not marking this because, as you can see, we swap with this wick on 1 hour. Okay, we have this fair value gap or imbalance, as you know, you can call it both ways. But for me, I hope that the price will reverse on this lowest point of the wick. Okay, on the lowest point of the 1 hour candle. For me, it's important to see this. I mark this up and then I wait for the price come here. Imagine the price is here, liquidity here. For me to enter on this trade, the price has to have break this liquidity and then go to the upside. Okay, or you can possibly come pick up this all liquidity, but for me to enter on this trade I have to have certain criteria met before I enter the trade. So let's start analyzing this. Okay, we have this candle that sweep, as you can see, this liquidity. Okay, we have this here, but imagine the price is on beginning of New York, it's 6,000 pips away for this price here. Okay, we can mark up and wait if it reverses here. So let's start analyzing. Okay, for me, I start doing this. The first thing that I go to the charts, I mark up my points of liquidity that possibly will get taken for me to buy gold. You have to the first thing you have to have, it's your bias on the pair. You can sell it, but in the meantime gold is completely to the upside. And as you can see, the news and more news are coming to see that gold is still going higher at least at the end of this month is going higher. Okay, but for me to enter in this trade, I have to see, look, if okay, let's first things first. Okay, we sweep and then okay, we sweep, we left this liquidity above below here, we respect it, we have this liquidity respected. As you can see, this price was swept and go to the upside as well, so we marked up this here. As you can see, let me put this here, that's important. After we sweep these points of liquidity, it means that for me there's no liquidity, that's no more liquidity to get taken here. Maybe later, because we respected with this lower high, we respected this, and then maybe later in the price we see the points of liquidity getting taken to go to the upside. Okay, so let's analyze more. We have this lower high that got swept by this lower, this week equals, okay, and then we respect it, and then we sweep and we go to the upside again. Okay, so the price is starting to see bearish movements, and then as you can see here, what we got, we have liquidity here because this price respected, and then we still not get liquidity taken. And as you can see, the point here, the lower high, the higher low, sorry, did not sweep this high. It tells me that we respected this high, and then we move down. Okay, as you can see, this high gets swept, and then we move to the downside. Okay, as you can see, the same example to the upside is the same example as you can see to the downside. Okay, as you can see, we could marked up here. We have liquidity here that got swept. That tells me that right now this high has no liquidity to take. So soon as the price breaks this, we can see the price moves down. Okay, and for me to sell this pair, I would love to see in 1 minute or 5 minutes an inverted fair value gap, as you can see here. We have this high swept here, and then we move, and soon as we retest this high, that means for me that we have no liquidity, we reject it. As you can see, the main points that we have on the PDF that I sent you, we have to see an inverted fair value gap, an engulfing candle, a break of structure in 1 minute. As you can see here, we have break of structure on 1 minute. We have an engulfing candle, not an engulfing because we did not sweep the lowest of the week. And as you can see, we have a fair value gap that got respected and an engulfing candle to the downside. Okay, as we can see, we could enter here, stop loss right above the high, and then we could look at 15 minutes to our possible targets. As you can see, during the session of New York, we have this liquidity here. Maybe okay, we swap and we have liquidity down here. This, as you can see, this week swept the previous lower high, and then we move forward. So we have liquidity over here. As you can see, profit targets. The first profit target could be hit soon at 20 p.m. of the day, because I am UTC +1 or 0, as you can see. Okay, but the same thing happens every single time. Soon as the market's going to be sweeping the highs and retest that high, we do not have liquidity to continue to the upside or to the downside. As you can see here, this is a B setup because we did not induce sellers or induce or as you can see in 5 minutes, let's see if we have, okay, we did not have a break of structure. The price, okay, we swap this and then maintain the lowest, and then we made a break of structure. We induce sellers and did not swap this. Okay, for me to enter this trade here was not valid. Okay, and soon as the price moves forward in the day or in the session, I'm not enter. Okay, so as you can see, let's move forward. We swapped, we did not have liquidity, and you can see we have a push down. Okay, we swap this liquidity and then we start to ranging. As you can see, the price did not break this. We break and then close below, and then we break it and then close below. We break to the downside and then close above, same as here. And then when we go up, we see the price induce sellers into the market in here. As you can see, we induce sellers, maybe here we induce sellers, and then we do not retest this, and in the first day we have we left liquidity. As you can see, this high swept the previous highs. Okay, as you can see, we have a sweep of these three previous highs, and then we move forward. We respected this, we did not take this high, and then it tells me that we have liquidity above because this low has respected this high, so we have liquidity above. Okay, we marked up as this, we marked up as liquidity. Okay, and then as you can see, the price range and breaks, and then we have this high that did not sweep the previous high, and we have a lower high that got swept on this previous London session, and then we got the price down. As you can see here, we trap buyers. We have this imbalance here. We trap buyers to the upside. Everyone was thinking that, okay, maybe if I go here, stop loss above this, below this, and we are going to the upside again. This is a trap buyer. Okay, and then we get that liquidity form for all the buyers that enter here. As you can see, we have the same strategy again. We have this liquidity respected. We have this liquidity here that got respected, and then we swept and moved down to the downside. Okay, as you can see, we did not retest it, and then we did not do the same as here. We swept and then retested and go to the downside. As you can see here, we did not sweep, and then we go down. Maybe you could enter here because we swept this lower high, and then we created a new high on the session. We swept, and then we got here to swap all these two previous liquidity points. And then, as you can see, let me pass it to the 5 minutes, 1 minute. Let's see. And then we swapped, and then we retested, and then as you can see here, a pin bar showing start to the downside. As you can see here, imbalance in 1 minute, a fair value gap, inverted fair value gap, sorry, let me put this. We inverted this fair value gap, and as you can see, we are creating liquid points to the downside in 1 minute, and then as soon as it breaks here, stop loss above the high, and then we can see that in 15 minutes maybe we have still liquidity here to get taken. Okay, we could press down on sell and then wait for our take profit to get hidden 1070 pips. So as you can see, we could sell. Okay, but always respecting this kind of price section. Okay, we have to look at 1 hour, see what the price, what we swept, and then looking for inverted fair value gap, um, engulfing candle, or a respected 1 minute fair value gap to the price, to the side, to the to buy or sell. If we are looking to buy, okay, we respected fair value gap to the upside. Okay, so we swept, so there's no liquidity for me in this high. Pay attention to this. The market show me that we have no more liquidity here. Okay, for the time being, for the session or for the day. Okay, but taking in mind that we have still liquidity here, 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 here. We did not swap these previous liquidities. Okay, we did not swap these prior liquidities. This is the point. Okay, so we still have liquidity building for us to, on the buy side, to get the price higher, to get liquidate these all sellers. Okay, let's move forward with the price. Soon as the okay, this got taken, this got taken, okay, this liquidity got taken as well, as you can see. So the price, let's expect that to see if we have an inverted fair value gap gets on 5 minutes. Okay, we are rejecting, and then price respected this little fair value gap, but for me it's not, it's too soon to enter on buys. Okay, too soon. As you can see, in 1 hour we have taken all this liquidity down here. It's why is too soon? Because we swept this and we are still in shorts. We could see sellers getting the price lower for then buyers enter into the market. Okay, as you can see, we have still liquidity here, still liquidity here and here. Okay, we are near to take out this liquidity, and then we could possibly see the market reverse. Okay, for us to go in the upside. Okay, I explain later why this pink box is here. Okay, or red box. We have swept this liquidity, so did not expect sweep this liquidity. Okay, this would have been a spectacular seller's trade. Okay, and then as you can see, the price is still, it's below this zone, and all you can see is, okay, that's not time for me to enter on this trade. You could enter on a reversal soon as the price does that. Okay, we swept the liquidity, we have the price taking down all the liquidity here, and then in 5 minutes, as you can see, we have respected this. We have inverted this fair value gap with a strong bullish candle. But for me, if you enter in here, sorry, my target would have been like this here, and we have this liquidity here as well. So for me, the price, the stop loss would have been in this previous here. For me, this is a large stop loss. I did not enter in this. Okay, I have to expect the price induce sellers into the market, create liquidity points, and then we go to trap them. Okay, same examples, the same thing. Look for trapped sellers or buyers, and then we push the price higher or lower. That's in this case. Okay, we have seen this here. Okay, we have here a break of structure to the downside. We could induce sellers here, and we left liquidity here. No, okay, we swapped this liquidity point, and then that tells me that we could see price going to this liquidity zone. Okay, let me delete this. Okay, the price went to the upside here. This price doesn't make sense for me now, and then we swapped, we respected, so there's liquidity here. Okay, and soon as we see this, we trapped sellers. Okay, we have to expect this sellers entering the market. Okay, maybe 1-2 times, and then we go hunt this sellers target stop losses. Okay, we enter and let's follow the market. Okay, we have this candle swept all these 3 candles and falling this gap on the day. Okay, we have this low, and then we got taken and move forward. Okay, we respected this, so liquidity is here. Okay, we swept this but did not swap this. We still have liquidity here. Okay, so we have liquidity here because we respected with this previous high. We respected, and then we swap this here. So, but we are still waiting till the price comes down to this zone. We have to pay attention that we still have liquidity here. We did not go, we did not, or we can't go buying soon as this we swap liquidity on the 1 hour and expect the price to go higher. We have to see the price coming down here, and then look for in 5 minutes an inverted fair value gap, as you can see here. We respect this fair value gap, and in 1 minute I want to see the price maybe, let's see, create another break of we have breaking the structures in 1 minute. We have not make an engulfing candle, maybe in 5 minutes, nothing. Okay, we know that we can do as Marco said, put our order here and our stop loss below this low. Okay, and then expect the price to go higher. But for me, soon as I see the price inverting, I would enter the trade here. Okay, sorry, yes, in here, in 1 minute, and my stop loss could be maybe not here but in here, for example. Let's see if we have push, if we push price. Okay, we now know that one thing. Okay, we induce sellers into the market, so the probability of buyers stepping in soon as we take out liquidity, what we can see, we induce sellers, and then sellers will be selling like this, maybe. Okay, maybe I take profit, to take profits, anything, but the SELs from sellers would be like to the lowest, to the higher low, or maybe up here. But we have to see that we induce sellers and now we have to go get them. Okay, let's see if the price goes on our favor. We have second target. We could partial in here because we take out the previous high, and then we could see the price going for all time highs again. Okay, let's see. Maybe I enter too soon. Okay, let's see in 5 minutes or 1 minute. Okay, we have breakdown in 1 minute. We continue to go up, and then we get this price. For me, is still the best way to enter. It's like this: we wait the price to do. Let's push this to this side. Okay, we swap liquidity. We go and we break down structure in 1 minute, and then all I wanted to see is this. Okay, an inverted fair value gap on 1 minute with a bullish candle to the upside, right? Okay, we have this swap liquidity to the left, and then we have this liquidity in 1 minute. We swept and go, and then we came down here. If we swept here, we did not have more liquidity to go here. Okay, and then we know that we do not have liquidity here because we swept the to the low, to the left, and then soon as we see an inverted fair value gap to the upside, we enter on this trade, stop loss right here, and then we can see the price going much higher. Let's see the price does that. This is two-way. Let me delete this. Okay, and as you can see, full target here, stop loss right here. Okay, and let's pass to 15 minutes, see if we got taken out or if we go to the price. Okay, price is going up, down. It's normal. And then we are in profit. Soon as it breaks this, we could put break even, because this is the lower high, the first supposed target. Okay, and then we have these targets over here and these partials. Okay, now we are not in risk anymore. Okay, we could expect that sellers entering the market again. Okay, we are break even. Soon as the price doesn't take us out and break even, we could expect the price to go. Let's see. End of the day, we have price pushing down and then creating more liquidity to the upside, and then in the next day, let's pass this to 60 minutes, 1 hour, and then let's see if we have, okay, partials hit, second target. Let's hope that we could see price go into the full target. Okay, as you can see, full target hit, but same examples, 60 minutes, 50 minutes, 5 minutes, 1 minute, it's all exactly the same. We have to have this criteria in line, and our entry criteria has to be met at the point. Okay, I, I see at this exactly at the point that I am um, recording this video. In 1 minute, the same. We have liquidity built here. Okay, liquidity building. Okay, we have a breakout structure here to the downside. Soon as the market open, we have inducing sellers. We trap the sellers here. Okay, we trap the sellers. Sellers entering the market because of the POS that created here, and then we trap these sellers. Okay, taking out these previous highs, we trap the sellers. As you can see, we have the price coming down again. Okay, let's see if we see points of liquidity in 5 minutes. Okay, why did I not enter in this trade? We have trapping sellers here, and as you can see, we induce buyers as well here because of this POS. Okay, we create liquidity for us to get taken. Okay, and then we have created again a POS in the market. To then trap buyers again. Okay, trap buyers. And for me, the entry point of this trade would have been, or has to be, in here. I have to expect the price come in here to then to go to the upside. Okay, but as you can see, in 15 minutes we have a breakout structure. We right now are inducing buyers on 15 minutes, creating this inverted fair value, this fair value gap, and we are trapping buyers. Okay, we are creating liquidity for then maybe next day to get taken out to the downside. We have liquidity. We have all these points right now to be taken to the downside. Okay, but for me to sell it has to be above this, and of course Windows buyers, we have to see a spike, and then let me delete this. We have to induce buyers, inducing more buyers, creating a wick, and then when the third time that we tested this pair, and then I have to see an inverted fair value gap for me in 1 minute to enter, take profits, SL above the highs, and then we go get all this liquidity. Every time has to be the same, but you have to follow always your analysis, your bias on the pair. If you are bullish or bearish in the pair, you have to follow all that criteria. Okay, hope it helps, and if you have any doubts, let me know. Bye.